Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. It is not April 5th, 29th. Obviously, that didn't come out on the slide correctly there. Oh, I can't get to it now. That's okay. Um, yeah, it's April 5th. It's not April 5th, 29th. Uh, yeah, rolling along. April, I can't believe we're here already. It just seems like amazing that we're already deep into spring, and yet we still have things like snow flurries, and I guess Texas had hail, sleet, rain, ice, something like that a couple days ago. Friends of mine sent me some pictures of it. So it's absolutely crazy. But again, spring craziness. And again, the markets have been no less dramatic. And again, we'll dive into that in just a few seconds. So for those of you that are new today, I always like to give like a brief introduction. We always have some new people. Welcome, first off. But I'm the president and CEO of Keep Trading Simple. I'm not actually a Nadex employee. I've just partnered with Nadex over the last few years to help provide education content for them, analysis, written some articles. It's definitely been fun, and it's something that I, will be, definitely in the near future continuing. So hopefully you guys enjoy today's program and you become a regular. As you guys know, if you have any questions about anything I say today, you guys are more than welcome to ask it in chat, and we will do our best to answer it right away. If not, I'll give you guys my email address at the end. You're more than welcome to shoot me an email message. Spring, obviously, as you guys know, is a little crazy for me. So, again, it's not going to be an instantaneous response. Just give me a few days if you have any questions. All right. Just so you guys have a little bit of background of kind of my trading experience. I started back in the Y2K era, back in 1999. In the, I guess it's easy to just say, the tech boom, right? I'm actually an East Coaster. I live in Maryland, so the tech boom, Northern Virginia was kind of the epicenter of kind of the internet bubble. So I got to experience that right off the bat. Started trading stocks and traditional options. Found currencies about 5, 6 years in. Fell in love with it because of the leverage, the time, the 24-hour nature of it. Then learned how to trade futures. Did become a financial advisor. I was in that industry for a short time. I did work for one of the big three banks, which was awesome for me because I got to really learn about bonds and the relationship of bonds to the overall markets. Um, it's something a lot of at-home traders never hear anything about, never learn anything about, don't understand any of the relationships. And it was actually a great way to kind of round out kind of my trading and the way that I look at the markets. Um, Getting it from the inside versus what the outside, there's a lot of perceptions that people have that are not necessarily true. I found out when I did get on the inside. I can say that I did work on Wall Street, the actual Wall Street in the financial district in New York City. I was never a floor trader, but I used to walk past the New York Stock Exchange every day for work. Um, Awesome experience. I could see the bull right outside my office window. Used to, have happy hour, lunch, all that kind of stuff with all the floor traders. So got some really, really cool stories from it. So it was definitely an experience. I know not everybody can have out there, but was definitely thankful. And again, part of kind of my analysis on the market comes from that experience. So, and I'll be willing to share whatever you guys want to know with that today. So, um, obviously, I do things outside of work. Actually, right now, I got a 5 month old passed out on me. So if you start to hear some odd noises, yes, you are hearing a baby. He's passed out, but we'll see how long he lasts. Um, he'll leave us sometime, but my wife has not gotten back yet from an appointment she had to go to. So yeah, multitasking. But again, that I think in this day and age, everybody is a multitasker in some sense or the other. So he does like trading. He does like charts. Even at 5 months, he likes to stare at them and then smack the keyboard. So it's pretty cute. I should put it up. It's like some type of like TikTok meme and get like 8 million viewers of a baby trading, hitting the keyboard. So it's pretty funny. So the agenda for today, what we're going to cover. Oh, actually, let me cover the next risk disclaimer first. I should really switch these slides because it gets me every time. Um, but as you guys know, the trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost at end of the transaction, including fees. You should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and your own risk. Past performance is not necessarily indicative of future results. None of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Now, Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of Crypto.com. You guys heard all about that. Kind of a cool thing. We haven't heard too many headlines from it yet. Again, it just went through. I definitely think there's going to be some fun news that we'll get in the near future, and I'm pretty excited about it. We'll see when they actually come out. There's always that big hype, and it happens, and it's like yes, and then all the behind the scenes stuff happens. So I'm really, really excited to see all the new things that they come out with, and as soon as we can, we'll definitely talk about it. All right. Um, all right. So here's the agenda for today. We're going to cover the upcoming news events. Oh, hold on. One sec, guys. Sorry, it was okay. Sorry. We're going to cover the upcoming news events. This morning there was a lot of news. It was not really planned. It wasn't really an economic news release. It was some comments. And it's comments that are extremely important to an economic news release that we have tomorrow, FOMC meeting, mini minutes. There's a lot of stuff about to happen with rising interest rates. There's potential talks of recession. Today, the dollar went absolutely insane because of the comments made. So again, could be a foreshadow for what we're going to see tomorrow afternoon. So again, we're going to talk about that and kind of what the other trading events we need to look for this week. We're going to cover the indices. Obviously, the indices are going to be affected by what they're mentioning. Forex as well. This morning during our morning presentation on YouTube, the Aussie was just going crazy because they had made some comments last night. Well, guess what? Then U.S. session opened and we had two different Fed presidents speak, and the dollar went crazy. And this is what happens in this environment. Um, I've been mentioning it for the last 6 months that 2022 is going to be the year of forex again. Rising interest rate environments are always amazing for currencies, and if you're not attempting to learn or attempting to trade over there, you're really missing out on some amazing opportunity. I will say that's one thing over the last 22 years. I've been educating for the last like 15. Is you always have those people like they snub yours. It's like it's forex. I don't trade that. It's like really because you're missing amazing opportunities. Um, and it's so much larger of a market than the indices. People think that the indices is where it is, but no. I mean, if you take talk about globalization, forex is really. I mean, it dwarfs the U.S. stock market. So a lot of opportunities. We're going to break that down today and see where some trading opportunities exist, and then we'll cover commodities. And again, a lot of the commodities action is because of what's happening in the currency realm. So, um, yeah. Again, gold, silver, oil, and natural gas. Natural gas was on a mission this morning, and again, it's a geopolitical based commodity right now. That again, definitely have to use some caution when you're trading it. All right. So with that, let's go over and let's go to here. Here's one of the big headlines of the morning. I love it. I love it. I saw it out there earlier, and when it's the hottest bit of news, it's the most recent news out there. Canada's maple syrup heist perpetrator, in Canadian in Canada's Supreme Court, they ruled against this guy. Right, his gang pilfered 3,000 tons of sugar or maple syrup. Right, this gooey, sugary goodness. So again, it's a real thing. We always like to joke about this. I left this up here, again for my wife because she's from Canada. I pick on her all the time. But we talk about how we have a strategic oil reserve here. They actually have a strategic maple syrup reserve, and I'm not lying. Go look it up if you don't believe me. But it's absolutely funny that their Supreme Court is ruling on, gang theft of maple syrup. It's a real thing. Um, Anyway, I'd love to say that there hasn't been a lot of movement this morning. It was crazy. The Aussie dollar was up huge, and now it's up only a little bit. You're seeing the dollar yen flying. Euro dollar down 70, which is a nice run. Euro pound down 42. Again, the Ukrainian situation is still weighing on Europe. Last night, it started off with Australia. They didn't change their cash rate, but they made comments about we're getting close to that time, right? ISM services came in a little bit, a little bit weaker than expected, but not enough to really kind of throw it off. I think services is definitely something we're going to have to start watching out for. There has been other headlines in the overnight, things like this about how we're seeing service sector is showing, slow growth. CNBC did this study here, and they said, what's the first thing, if this high prices, persist, what are people going to do? The first thing was cutting back dining and driving and going on vacation. These are all service sectors, and those were the biggest things. And what have people have already done? They're cutting out going out and having monthly subscriptions and again driving places and canceling trips. They've already haven't gone crazy with that yet, but it's starting, right? And other things like buying homes and generic products. So again, service is one of those things that we're starting to see it. A lot of the comments today were also and again, George made this comment a little while ago. No question, accommodative policy has to be removed. You know what the result was? That the dollar absolutely rocket ship going from 98.90 all the way up to 99.40. Almost, I mean, within the last hour, this is how much I mean, that is absolutely monstrous movement, right? For such a big comment, right? So, and again, we don't even have the minutes. That comes in tomorrow. So again, big news on that one, all right? Now going to the rest of the week, you can see tomorrow, Wednesday, Actually, you know what? Let's just do it this way. It's probably easier. Going into Wednesday tomorrow, we have some big important data. One being crude oil inventories, right? Now, crude oil inventories, they were at minus 3.4 million last time, expected to come in at minus 2.9. How much control crude oil inventories actually has over the price of oil right now is really not that much. A lot of this is a geopolitical type scenario. Obviously, Russia is an absolutely enormous producer, large, powerful member inside of OPEC Plus. Um, right now, OPEC Plus is kind of, I would say, more, for lack of a better word, has rallied more around Russia. Saudi Arabia, UAE have all been kind of more supportive of oil policy, being left out of politics, which again, Russia makes a ton of money off of it with prices this high. We don't have to worry about funding Russia's balance sheet. They're, everybody, hurting their balance sheet with oil. They're doing just fine. Um, so yeah. But crude oil inventories, again, it is a tradable event. It can be big. And then again, FOMC meeting notes tomorrow. If you look at some of the latest news, again, we have George talking, we have Bernard talking, we have, um, you know, how Russia rescued the ruble. It's not even done yet. It's going to get worse. Um, these are big, big names. And again, we're going to see tomorrow what that first kind of policy looks like. George, again, no question, it has to be removed. That's a big one. 50 basis points will be the option we have to consider. And again, we've only been talking about, 6 times at 25. This is big news, right? I think the market's already started to factor it in. But Jamie Dimon made comments yesterday about how the Fed's going to have to control inflation. The Fed is going to have to raise it more than what the current population or economy believes. Again, very smart guy. Pretty much everything he says has come true. So we'll see. He was making comments about how the Fed's going to have to, shock. It's going to have to be a violent raising, and we're looking like we're getting there now. We're going to be very deliberate. We're going to move fast. They need to rethink both rate hikes and balance sheets at the pace. How fast are they going to do it next meeting? And this is the big one. We're going to witness a slowing of GDP and a waning of fiscal policy, right? We may have to go above neutral to bring inflation down. Again, acknowledging inflation of how bad it is, and again, it's these type of things. What's this going to do to the overall economy, right? This is what we're going to do. This is what we've already started to do, right? And 75% of people think they're going to have to start rethinking how they're using their money right now, their financial choices. 75 is a big percent, especially in an election year, okay? Um, that's tomorrow. Thursday, we don't have a whole lot. Unemployment claims. Bullard's going to speak. She's speaking at economy, monetary policy. Again, it's a day after the meeting notes come out. She spoke today, but I don't think her comments were as big as George's comments. Again, I feel like she really needs to focus on the digital dollar. The more that she, I'm sorry, this is Bullard. Bullard, actually, I would definitely pay attention to. Sorry, I thought it was Bernard. Bullard actually is a very, very important speaker. He's been the one that's been the most hawkish, saying zero point 0.5. He wanted to do zero point 0.5 last time. Um, so I would say that this is probably definitely a market moving event. Especially in response. If he's the one to send, if for some reason they talk about how 25 is there, he's going to be the guy that's like, yeah, we should have raised it 1% this time. So again, he's had his finger on the pulse. He was saying last time we needed to do much more, and now the rest of the Fed is catching up. So again, kind of the driving force as far as raises go. So I would say he's probably the event of the week as far as that goes. And then Friday, the only news we have is Canadian employment. Now, Canadian dollar has been it's kind of been whipsawing back and forth. I think 125 has been the big answer, or been the kind of the big magnet area. I do think it goes lower. I think Canada is getting ready to kind of raise. The question is, are they going to outpace what we're raising? But again, oil is also a factor in the dollar CAD. Again, the strength today is probably more because of oil, even with all the dollar. I mean, again, the dollar exploding, you can see that this is still down 36, showing Canadian strength here. So it's definitely kind of what I would say is a battleground currency right now between the price of the dollar, the price of the CAD, as well as oil helping the CAD. And again, questions about dollar supremacy going into the future. Okay. Um, yeah, so that's the craziness. And then Saturday nothing, Sunday nothing, and then next Monday we have OPEC meetings. Again, because this presentation is on Tuesdays, it's always important to mention what we have on Monday. Um, thus far, OPEC has basically told the U.S. pound sand, we don't care. They rose last time a little bit more, but it was kind of it was kind of what the expectation was. They'd been doing 400, 400, 400, and they did 432 this time. They expected a moderate raise, so it wasn't like it was like, hey, they're trying to really help us out. But at this point, the only things they've said is, what they do with oil is going to remain completely, out of the political spectrum. It's purely based off the numbers and the demand that they are seeing. again, they acknowledge that it's great that everybody would love to cut Russia off, but there's no way to replace that. Every country in the world has already said that, yeah, there's no way. They just produce too much oil. There's no way to cut it off. And again, OPEC is doing things a little bit differently, right? Allowing other countries to now purchase obviously China is allowed to purchase now and using their currency, not being required to use the dollar. Um, there's some dangerous things that the United States is doing with the dollar, particularly in regards to um, payments with debt payments with Russia. Again, there's been some warnings about weaponizing the dollar. Again, I don't understand how we're able to do it and think that the dollar has a future in my eyes. And again, OPEC is kind of where we're seeing the first inklings. Again, remember, oil's priced in dollars. It is because the dollar is the reserve currency. When the dollar is now weaponized and people are cut off and they're not allowed to use it, it cannot be the reserve currency going further. Um, which means is the petrodollar gone? And if it is, again, the United States is in major problem, a major issue. We're gonna have all kinds of problems. So the first inklings of that are going to be next Monday. So again, next Monday, I would definitely be watching oil. There's going to be some comments, some headlines, and we'll see where it goes. All right. So let's go over into some of the charts. Obviously, we've seen the dollar. The dollar's a little bit nuts right now. And let's talk about the VIX. Yeah, VIX is up 10% today. Not necessarily what you want to see. Um, yeah, a lot of volatility, a lot of comments, a lot of satellite images, and again, I don't know. There's a lot of bad news about the war. War is never good. It's about the atrocities of what the soldiers are doing. Again, scorched earth is never a good thing for the populace. Again, it just shows you the horrors of war and how bad it could potentially be. But now again, the United States is going to block bond payments and not let Russia pay. Again, also it's like, well, wait a second, you want them to pay you, but not pay you at the same time. Also raises the volatility a bit up. All the headlines about the GDP slowing and raising interest rates higher than expected, also jacking the volatility up. And as such, you know, all the indices are in the red. I mean, again, these were comments that we weren't expected to be as pointed, but again, in the environment we're in right now, every one of these little things is kind of a straw that could potentially break the camel's back. And we're kind of seeing it right now. I mean, NQ is down big, Russell is down big. And again, the reason why is because of these comments, right? These are comments that are very sharp, very, very strong. And ones we don't normally see, I would say that these are out of the ordinary based comments, particularly from George in general. But again, it's another person with very, very strong language. And this is why, again, watching headlines is so very, very important in understanding what this actually means for the overall market. As such, again, we'll go down to a 15-minute. We'll kind of see where these candles are. You can see that earlier today, in the session that we did earlier today, we talked about how we were at an area of buyers that it looks like at the open, we're looking for a long opportunity. And you may say, well, wait a second, this got blown up. You were wrong. No, I wasn't wrong this morning. We had talked about how this was a level. We talked about the pullback, and here's our 9:30 opening candle. So, again, if you guys are, we don't give out trade recommendations, but this is how I saw the market this morning. And again, it was a 1 to 6 trade. The 1 to 3, is kind of what our minimum is right there. And this is why trading is such a great thing, right? We were able to see this one well ahead of time. It was a set and forget. There's your opening candle. It blew through the top, and what did it do? Every week I talk about 10:30 being the reversal candle. There's 10 o'clock right there. It ended up reversing early. Why did it reverse? Because at 10:12 is when she made these comments. Okay. So yes, markets are all red, but there was an opening trade where you should have gotten long this morning off the open, and that we talked about it. So again, right now, where's this one going to stop? I would say there's a couple areas that we really need to be cautious with. We're going to pull this one off, and we'll draw new fibs on there. Really, just kind of low to high. And again, this is not the ideal place to draw it, but you can see it had a little bit of a pop, a little bit of a hiccup around here. I would say right now, what I'm looking for is right around the 61.8 level. You're seeing that there's a decent level of basing, and some buyers stepped in. That would be my first target. Oops. Let's move that over here. That would be my first target, is where I kind of say, hey, listen, could this turn and roll in the afternoon? It potentially could. But more so what I'm looking at now is look at this area over here. This area is not fresh. Here was kind of the first level of that basing, and I guess in reality, it's probably more there. We've hit it again. It's not new. It's been hit a couple times. If we come in here and we start to base sideways, all of a sudden, what I'm saying is, wait a second, this is an area that's been eaten up, and there's a bit of a racetrack right here. Or we have is there a potential to have this one short? And I would say, yeah, absolutely. right there. That's 2.9. Is there a little bit of buyers in here? Yeah, but it's about three-fourths of the way, and the negativity of that one should suck it down again. I would say overall profit targets for me would be down in this level right here. Okay. Um, and again, the reason you may say, well, why? Why would it go that low? 4,500 is close to a psychological level, being that 4500. The comments that were just made, absolutely 100%, it deserves to go down. Again, that's a second person that's talking about point 0.5, another voting member. And again, very pointed that, listen, we need to do this now. We need to talk about the pace of how fast this is going to happen. It's another person jumping into the Bullard ship and not the Bernard ship, or the Powell ship. So, again, is it going to affect the big companies out there? Not so much. I mean, they got a lot of cash, but is it going to hurt the little companies? Yeah. And the question is, how fast are they able to do it? So, not only right now, the little companies, particularly service companies, they're borrowing money to pay bills because it's free, right? It doesn't cost a whole lot. If people are going to continue to not go out and not spend money like at restaurants, and you're going to make, and again, to pay your bills, you got to borrow at higher rates. That's a very negative recipe for a lot of small businesses in the United States. Okay. As well, she said the GDP is going to be slowing. So, again, with FOMC tomorrow, I think a lot of the oomph is probably taken out of it at this point, but this is what we're going to start seeing. The market's going to adjust. I think, again, staying negative is kind of what you're looking at. NQ. Okay. NQ didn't even slow down. We talked about two potential levels at the open. NQ got to here, and it did kind of spike and take a little bit of a pop and then started to base through. The problem with this level, this 23 pullback, is it wasn't the cleanest level, and the red confirmation really pushes to the brink. I am surprised that we didn't get much more of a hold at 15,000. But really, once we broke 15,000, I mentioned that, hey, listen, if we break that, this is going all the way down, and that's literally what we just sliced through right now, right? It came through and sliced through at the 61. I wouldn't, at this point, I don't think I'd step in front of NQ. I think we're looking for probably action all the way down to this level. And again, this is one of those nice things about trading that it's like, yeah, this is kind of what we're looking for, but if we break through, I mean, look at that. That is it's a zone that's screaming for a short, and it blew all the way through. And at this point, I think we come back down, and 14,755 is on the radar. We talked about Apple and Tesla holding. As soon as they open, they both drop fast. Look at this. Apple down one has retraced the same type of parabolic move, and Tesla, there's your parabolic move yesterday. And look at this. Actually, this should have been drawn on 15 right there. Right there's the basing level. We based, we pulled back, and then bam, you guys all know what this is called at this point, right? You guys all know what the break of the zone, the base, the pullback, and then looking for the short is, right? That's the Harry Potter trade. And again, a chart is a chart is a chart. It's the same thing. We had a level of basing, we've been holding it, we had a big strong push up. We pushed through, we based, we pulled back, we touched that same zone, and bam, off to the races. So again, Tesla is also helping drive that drive all the way down. So, you know, with this driving, I think 14,755 is the target today. YM, yeah, we talked about and again, this one's off by a little bit. Look at this, 915. We missed it by just a little tad. And again, had you been using Nadex on this would not have been a true stop out. At 915, it pushed down, and we talked about this level being a great level. Why? It was an area of basing, right? It was an area of basing, and it was a demand zone. It was also a 50% parabolic, or a retracement move off, not including, obviously this is all happened. It's really here, right? But we said it's that kind of confluence of two different kind of trading setups at the same time. As this dropped in at 915, you should have been looking to trade a two-hour binary contract. You can see that this one would opened up at 930. Really, in the first candle, it went up 260 points. Okay. At the overall peak at 10 o'clock, and again, had you done 9 to 11, 331 points. That's absolutely massive movement in a 2-hour binary window. Definitely easy to grab some profit out of that. And now it's rallied all the way back down. It's only down 0.36 from where we were yesterday, and we're approaching that same level. And I think at this point, again, it already breached through, so we're not looking to take it again. I would say there's a small hiccup here, but I think this one comes all the way back down to, and again, we pointed it yesterday. If we're able to break this low, we're coming back down to 34,500. I think that's our next downward side target in this one as well. But again, even though all the markets are red, look at this long trade from the open, right? Again, the pullback right into a level, again, confirming base strategies, huge explosion. Now the Russell. Now this one, we were talking about 2100, and it got up to 2100. it literally peaked above, and I said, hey, listen, the way this is set up too, if we can get a little bit of a pullback, this one stabilized and ended up punching right through that 2100, and then immediately turned and reversed right back down again. And again, as it should, at 9:45 is when this one really started to turn. It's funny seeing this turn a little bit early. I mean, if I put on the 30-minute, you can see that there was the kind of the opening, right? It shot up and came back down. It already started to collapse before all these comments came out at 10 o'clock, but the end result was exactly the same. It collapsed all the way back down, and we're actually through here. And again, why Russell, small company, raising interest rates is much worse for smaller companies than bigger companies. Again, completely justified move to the downside. Downside. Where does it stop? Oof, probably all the way down here, this last retracement level. I would say look for the Russell to come down and tag 2046 today. So, and I did mention earlier today that Russell was kind of the weakest of everybody already, but any news based off of tomorrow was going to be horrible, and this is exactly what you got. And same thing, it punched up, right at here's our 9 o'clock window, looking at 9:30 where it was. Even if you had taken a short because we'd put in this lower high here, or if you're looking for it to spike up higher, this is massive amounts of movement from the open to now. Yeah. Look, yeah, look at that. You're talking about a 35-point drop already in such a short period of time. Absolutely short duration contracts on 15-minute charts. We talk about it every single week. And again, easy grabs inside of the market. Okay. Um, let's go across the currency. And again, you're seeing a big kind of reversal in this one. So we talked about a level. And again, a level got hit. It got hit. It got hit. It got hit. You're expecting the break. And then last night, huge movement to the top side. It ended up blowing through two levels. And why? Nothing happened, right? Nothing happened yesterday. No, nothing happened, but they mentioned that something was going to happen. And again, parabolic base move. Okay. So we were looking for a reversal. Now, at 10 o'clock, did we know that they were speaking today? Not really, but what we would have been looking to do is take a break of this level. If you're in the Aussie dollar, you should have been looking to get short. After everything rallied up with all the mentions, again, it was more for tomorrow we're looking to get short, but I feel like they just gave us all the data. And I would say kind of the same thing. We know that we have that area down lower. I would say that the target for me on this one is probably the bottom side. Again, parabolic move, level of basing, touch, and then again, just kind of rocketed through. And again, it all goes back to the same thing. You talk about raising interest rates by 0.5%, ending all, easing. It's massive dollar strength. So I think this one continues to drive lower. I'm really hoping that this was my trade for tomorrow, and unfortunately, I feel like everything that George just said is again prefacing what we're going to see. Now, Aussie yen in general, you see the Aussie yen is holding higher. Why? Because it's the yen, it's not the dollar. We had talked about this one punching higher and up to different levels, and it did. It kind of reversed off this level here. Again, that was the level we were looking for. And again, Australian news punched it way higher, which again is what you expect. Let's take this long trade off. Let's bring this up now and see. Ooh, look at that 50 right there. There's going to be my downside target right there. This level I don't need. And again, same type Harry Potter based trade. We're still seeing some strength right now, obviously, inside of the Aussie, not compared to the dollar, obviously. But this is kind of another kind of Harry Potter based trade. An area of basing, it's hit it, it's driven it again. We know there's been a big rally because of news. Again, they haven't actually changed anything. But again, once the yen gets strength, a 1 to 3 is only sitting right there. Okay. Profit targets on this one are going to have to be all the way down here, which also happens to coincide with the 50% retracement level from low to high. Okay. So again, great target. And could we look for reversals off of that level? I would say, yeah. But at first, it's going to be your target first, then look for a confirmation bounce of it. But 92.49 is where you're looking for. If you're looking to get in the Harry Potter, you know the rules at this point. It's going to be a break of 93.60. Look for a basing, a pullback, and a confirmation entry, and you should be able to take that one to the downside. Now, euro pound. Now, you may say on this one, look at this. This one just grinding. And it is. It's just grinding. Why? And again, we had a Harry Potter here. You see there's a in, and it's obviously all already out at this point. So let's take some of these off to clean it. May say, why is this one going back down? Well, most of it is because of the close proximity of Europe. And again, this one, look at this, it bounced. This was a target, hit it, came through, missed the reentry. This one, kind of the same thing. This level, hit it, bounced, hit it. Again, went basically same Harry Potter type trade. It pushed it to the brink, came up, broke it, base, pulled back, got entry again. Actually got 3 entries here, or here. And again, all the way profit here. So let's clean that one off now. We don't need that anymore. All right. Yeah, we're running at all these things. Again, these are probably the next 2 levels. I'd be looking for something lower. So Euro pound is going to continue to remain weak as long as the Ukrainian scenario is happening. Why? Because of the close proximity to the war. I would say right now it's a very dangerous game. A lot of headlines. Hey, listen, we're gonna, this is a great one. If you guys want to read what's going on and all the headlines that we see about how we've destroyed Russia, yeah, it's worth more now than it was last September before everything. UK, bans, to ban Russian ships and set timetable. These are great, but a lot of these two are headlines like, yeah, we're doing the right thing. We're blocking these ships. We're blocking the imports. The reality is, when people use it to cook, people use it for heat, you're hurting your own public. And again, Europe is the big one that wants to cut things off. The G7, originally the G7 says we're not going to play those games. We're not paying in rubles. And now they're like, oh no, we're just going to block it. It's like oil and gas are things that your countries need. Your people are doing less. They're spending less money because of the cost of gasoline. And again, gasoline is the main driver of inflation right now. You've basically just said, hey, we're going to ban ships. We're gonna not use anything that Russia has. It's like, wow, that's going to make it even more expensive, which means not only are people going to have problems heating and things like that, but you're making transportation more expensive, which means people are going to spend even less. So it's kind of one of those things. It's like you do the right thing, but at the same time, you're hurting your public, your citizens. So yeah, while I agree, I think it's great to not be relying upon gas and oil from Russia. Um, what's hurting the globe right now in the recessions is the price of gas and oil, and cutting off and blocking and trying to say you're not using it kind of sets the wrong precedent, right? Um, because the people that are still taking oil and gas are considered the opposition to us, right? I'm not going to say the good and bad, right? Because I think that's your based off your perception. But if we make a list of the bad guys right now, if the bad guys are the only people buying oil and gas, they're going to get it much, much cheaper than everybody else who doesn't want Russian oil. So, yeah, a lot of things to look at. But anyway, that's why you're continuing to see this one drive lower. I will say, watch the 83 level. 83 is traditionally low for the euro pound. We had data last week that euro was at the stage where they could start raising interest rates because of some data, because the inflation is getting out of control. But we already know that Germany's already put in plans in motion to ration energy, which is going to hurt their economy. So again, Europe is just not in a great scenario right now. Again, probably getting a little bit of a reprieve because the UK wants to block everything Russian, which again hurts their economy. But overall, I think again you got to be able to stay short euro at this point. Now euro yen's bouncing back and forth. We can adjust this a little bit. It's not that one I don't need anymore. Actually, let's draw this from the top to bottom. We'll go from here and down. So you can see that we had a 50% retracement move on this one for the euro yen. It stabilized a little bit because of yen weakness. We saw a little bit of a reprieve. And now it's kind of like, oh God, what are we going to do? We know that we have sellers sitting here. It's obvious to see. You can see there's a confirmation here. There was a spike up and it confirmed again. This will be the second, quote, third hit off of it. I'd say be cautious. Again, the 23 pullback was an easy entry, but it did push it pretty deep. I would say look at this level here at like the 135 level. I know it's kind of not dead on here. I'll make it because somebody will say, well, wait a second. It wasn't zero. There you go. You can see that the 135 is the last time where people hit. Japan has been getting kind of just massacred inside of the news about, oh, it's weak, it's weak, it's weak, it's weak, and it's playing into the hand of the yen in Japan. Remember, their Fed president, basically, like, not they don't have the Fed, but the central bank, the BOJ, he said a weak yen helps our economy. It's good for our economy until prices get over 130, and by 130 he means, excuse me, in the euro dollar. I'm sorry, in the dollar yen. It's not a problem. Okay. We're not even close to that right now in the dollar yen. We're at 123. So, will we continue to see this rise? I feel like no. I feel like this is a reversal opportunity. Anything else bad happens. And again, the whole bond scenario where Russia's trying, the United States froze Russian accounts. They were allowing them to make bond payments with it, using that up. And now they're saying, no, you can't do that anymore. So, it's kind of a weird precedent. It's like, wait a second, you're blocking them from making payments, but so they default, but you're the one that forced them to do it, and you want them to use the currency that they hold external from those accounts, but then what happens with those accounts? Are we just stealing the money? Because I believe that that's also, a problem. Like letting Russia use what they had in the U.S. accounts, but not letting them refill the U.S. accounts. That's the way to do it, right? That's not happening. So I think Russia will have some type of retaliation to it. And again, that should be a negative based opportunity. Again, euro yen short, probably around the 135 level. And look for this one to come probably back down and retest lows, 134.40 ish, right? 134.40 ish down here is where I'd be looking for this one to potentially bounce and roll off of. Okay. Euro dollar, obviously going down. Why are we seeing this? Same thing. It looks very much like the euro pound. The difference is we've had an acceleration. Obviously, 10 o'clock. We already know why. There's no question we need to do this accommodative policy. Um, what's important about this one is we are below the 110 mark right now. And you can see we kind of sliced through, again, 1, 2, 3. This was technically hit number 4, this one. Um, we're entering this territory right now. Okay. There's been a lot of pullbacks. I would say that there's an interesting level here. This is a very, very strong candle. And again, a lot of chop back and forth in here. That's a 108.82. We're a bit higher, but right now, let's see. How much does that have to go? About another 36 pips. Trying to see where there's potential re-entries here. Yeah, if we get a kind of a push up, I'd say that there's a short potential. I know, again, this is not necessarily again, I don't make recommendations on these. I don't give trades out. But I would say for people that are fib-based traders, that like to use fibs, I use them as a confirmation tool, not as an entry, but just to keep you guys aware of all opportunities and what people are looking at. This 109.31 will be a level that people are looking to get short this position. Is it justified in my eyes? It's not a trade for me, but I know you guys like the different tools and things that are out there. Taking this from the prior high to low, and again, we were really basing and we changed the trajectory of what the trend was. From this newly established trend, that 109.31 would be a 23% 6 or 23.6 pullback. That's a pullback level. How they tell you to wait for the pullback. That's where the weight of the pullback number is. So just keep an eye on that one. Just it's throwing it out there as an FYI, doing justice to everybody. I just deleted that other pull, but these were targets for us last week, and we've kind of hit those targets and pulled back. So just trying to clean the chart up a little bit because we have had such a decline. But most of the same things I said about the euro pound, obviously all true for the dollar as well. So I'll look for that one to continue to go lower. Now, do we buy here? I would say there's probably going to be some profit taking at this level. There's a lot of, I would say that this is kind of what I'm looking at over here, right? We know we have buyers here ascending and then a huge push. We know we have some here. They weren't able to go lower. There's 3 of them. We got a little bit over here as well. Got a little bit over here. Got a little bit over here. Really, until we get all the way down to this 108.30, that's the last kind of true level where we had any type of basing and pulling. And once we get in that 108 range, I think it's going to be a big deal. Now, can we get all the way down to this 108 level? I think, is it possible? Yes. Is it probable? Oof. That number seems to be getting higher and higher. I do feel that as more comments get made about this 0.5, I think we're going to hear more about it. So, are we at 108 by the end of the week? In full transparency, I actually won't be surprised if we are. And in reality, it's only what? 118 pips. That's 2 days worth of move. Not even 2 days worth of movement to the downside. And we're going to get FOMC meeting notes tomorrow where they're going to say, yeah, it looks like 0.5 is what we're doing. Yeah. Everybody, buddy. All right, let's see if he's a little bit quiet here. There we go. Yeah. All right, so Kip is awake, so so far he's trying to grab his pacifier. So we'll see if he stays quiet for the next 20 minutes. Unfortunately, he's sick, so the pacifier doesn't work well because he can't breathe through his nose. So, we'll see. If you heard, like I said, if you heard baby guys, that's why. But again, I think this is, right now the daily ATR, let's look at it real quick, just see where the range is. The daily ATR is 95. This is 120 pips from 108. So it's just over 1 day's worth of movement. With this something as big as FOMC meeting notes, yeah. So again, maybe it is worth looking at that 109.31. Pound yen, this one's going up, right? So pound yen, we bounced off this area a few times, had a couple different entries in it. Let's remove it so we don't confuse everybody, just to clean the charts up. Again, we were expecting a breakthrough. We had our 4 hits, actually 5 hits, and it came through and kind of based and then kind of catapulted off the top side. Let's remove these so we can clean it up a little bit there and there. We're gonna remove. Let's see. We are. Do we need this right now? Yeah, we'll continue this across. The reason why is we're at the 50% level. I would say that there's nothing sitting over here, but if we get a little bit of a reversal in the yen, um, this one kind of matches up with the euro yen, right? We talked about the euro yen being close to that 135 and kind of a reversal level. See some yen strength come back again. Aussie yen again. Breaking this would be yen strength, so it's kind of a yen strength Aussie yen. It's a yen strength euro yen, and it's also kind of setting up right now for a yen strength pound yen. Now, I think the pound is the strongest of those three. So again, pound strength, yen strength. Do what you like with that one. I think that one is probably the most at risk of the three. But they're all set up kind of the same way, showing us that we have the, again, the yen getting a little bit of a, I guess profit taking is probably the right word. It's not like there's anything. There was no headlines for yen strength in there, but again, kind of the same scenario. Again, I don't have really like a really great defined level. If we were using the most recent level right now, we'd be looking at something along those lines. And again, that may be where the pullback occurs. And I'll draw this. And again, this is not a trade recommendation. It's just you know your 1 to 3 would be right there, which is that's okay. That would be right in there, right? So it's a little bit shy, but again, same trade setup on basically 3 different trades. You just have to find the best one for you. Looking at pound dollar, okay? Even with all the pound strength, you can see massive push. And look at this. Oops, not that one. I wanted this one right there. And you can see those 50 percenters, they're really upset. One of my students calls this the pipette gang. This is more than a few pipettes. It's less than it's more than a fraction. It's actually 8 pips in there. But look at that. They were looking at this, and all these fib traders out there were looking at this going, yeah, baby, we're selling it to 50%. And then they saw this and was like, wait a second, what? Yeah, 81 pips in a matter of, what, 2.5 hours? All because of those comments. Again, kind of like the pound yen, this is pound strength versus dollar strength. Obviously, the pound market is closed. There's not really any new headlines bringing strength to that one. But again, we've talked about this level crashing through it. Look, we hit it, we hit it, we hit it. It's like, yep, this one's done. Hit it, hit it. Now we're basing. Question is, can we get the pullback to take this one for a short? I'd say watch for profit taking around 130.60, particularly if we can, associate this with the European Open, which would be right there. And you can see we have this PMI, right? S&P Global Chip News again. It's considered pound-based news tomorrow. So kind of looking at those two levels, I would say right now for me, for news-wise, I don't know if we can drive all the way down because that'd be quite a haul. Let's see. Oh, it's only 68 pips. Yeah, we could do that in the overnight. We could do that the rest of today. We'd need some movement. We need some help in the European session or the Asian session, but I think either of these two levels right now could be potentials for a news pop off of this tomorrow morning. Okay. At the European Open. And again, I do think we see some pound strength come back. It depends how many more headlines we see about G7 and what the UK is telling everybody else to do. Right. Oh, hold on. French elections. That's a big. Oh, here we go. Macron's victory in French elections is no longer clear cut for the markets. So now it looks like there is some questions about it. Yeah, and and just so you guys know, this is a scenario that we're going to see a lot playing out. A lot of the people in power will probably be cycled through because of the way that inflation, interest rates, and global contagions have kind of went off. We're going to hear a lot more about this, but it is interesting because I thought Macron, I thought it was pretty, I thought it was pretty locked up, but now if it's not clear cut, yeah, that's interesting that we're starting to see some slip there. Here you go. Central banks need to adjust mindsets of new inflation era. Yeah, so everything is it's all the same stuff. Inflation, inflation, inflation. So yeah, we could potentially get down here. I think 103. I'm sorry, 130.20 could absolutely be your target for the news move. Dollar CAD. So you're seeing this one kind of bounce all over the place. We had talked about a Harry Potter when we finally broke. You can see that we did. And again, it doesn't get any more clear cut than this. We're calling for the break. There's the break. There's the base. If you can't figure out that is a base, I mean, this is a I don't know how to say this. This is rigid. If you can't figure that this is, I mean, I always talk about it. There's your drop. I mean, this is like Minecraft, Harry Potter, right? Everything's square angles, and then basically straight down, right? I mean, we like to kind of do these where it drops down at bases, then we pull back, and then we go for the short. And again, it's called a Harry Potter because of the lightning bolt effect. This is a Minecraft Harry Potter trade. So I hope everybody was able to grab this one because we've been talking about this one for a while in dollar CAD. Um, Again, blew right through the profit target, came all the way down to 124.04, which is the level we were looking for. Again, I was shooting for 124. I said, yeah, I want one more 124 by the week, and I missed it by 2 pips, 2.6 pips. I missed it by. So, is this story over with? Um, I would love to say yes, but the reality is probably no. So we're going to put down here. I would like to get a true reading of this. Looks like 125 is again once again at the 125 mark. Let's see. Ooh, look at that! It is that level again. Oof. We're through the 23.6, so that was the important thing. That's really what I was looking for. Hmm. Yeah, buddy. I'd say I mean, 125 is such a huge psychological number. I wish I could make this like 10 times bigger. It is a 50% retracement level based off of this last high to low, right? Could I have readjusted it? Sure. I could have taken it and put it in here. And then obviously the 50 comes back to that level that we hit earlier. And again, it puts the kind of in the middle of the range. But I think doing the easy thing, the high to low, we've seen two bases there. And again, being a 125, that's a big level. I would say right now, with everything we heard, I think 125 is on the table. I think the next shoe to drop on this one is going to be either FOMC meeting minutes, which again, a lot of it may get baked in today, or if the next piece of oil drops. So again, um, is this going to be as clear of a reversal? Not really. But again, this was a super easy trade setup. And again, I hope to God anybody that's been watching the program was able to grab this one. It's pretty much textbook there. Dollar Swiss. So, not surprised the dollar Swiss jumped. We are coming up to a level right now where we had seen sellers in the past that kind of hit it, chopped around. So, it's struggling to go through. At this point, I would say, I wouldn't be surprised for this one to go a little bit higher. It is lunchtime. I do expect, again, some more dollar strength to come back into the market. Question is, does this rally all the way up to 93.60? I think you got to show some caution over here. We had one low here. I'm sorry, we had, a lower high, a lower high, a lower high here. And again, that's three different areas. If we box them off, there's kind of the first level I think you need to kind of watch out for. It is stuck between the 71.8 and 78.6, so you're not going to get as much of a kind of fib assistance on it. But right now, again, testing, we've hit it, we've pulled back again, and there's a parabolic move. The second we get a confirmation, whether it comes in here, if we're hitting it right now, or if it comes in higher at 93.18, targets for shorts need to be right here. Somebody's waking up. He's like, "Where's my food? I've been awake for 5 minutes." There you go. Did you throw your pacifier? Yeah. Gotta love it. Gotta love kids. Kids are so funny. It's like they throw something and then that's exactly what they want. He wants the beat on the keyboard. So, but again, two different reversal areas I think from there, or again, what's coming in this one in the dollar Swiss. Again, Swiss should be gaining strength based off of everything we're seeing with Europe. Unfortunately, the Swiss is no longer neutral in this situation. So again, they've lost some of that oomph as far as a safe place. They're actually considered a hostile territory for Russia because they also supported sanctions. So not the neutral that they normally get. The dollar yen. So dollar yen, as we mentioned, we are looking for a reversal in the other yen pairs. The problem with the reversal here is we have so much dollar strength being poured into the market right now because of the comments of 0.4 and the quantitative, removing the quantitative easing. Things like how fast are we going to pull those off, but they absolutely have to be pulled off. Again, this is one of those ones. Do you want to kind of, you want to try to catch this one at the top? I think if you want to play the dollar right now, I think it's again, it is such a big deal that we're finally getting to the 0.5 conversation, and the market has not factored it in yet because they've talked about such weakness. I think this one has the ability to move. Now, I will say, again, is it kind of in a similar scenario? Yes. If we continue this across, again, we have the Harry Potter trade lower. Again, it chopped through the 50. It wasn't a big deal. But now we're at the 61.8, which is also another level a lot of fib traders will use. It also coincides with the Aussie yen, the Euro yen, the pound yen. It is also in an area, but the question is, do you really want to go against the dollar right now with that kind of conversation with FOMC tomorrow? And I think the answer is not really. I like the long yen pair, right? I like the long yen trade. Shorting the Aussie yen, the euro yen, and the pound yen. The dollar's the one that I'm a little bit more iffy with. And again, I'm a little bit more risk averse. If you guys like it, it's there for technical reasons. It is a 6,218. It was an area. There were strong sellers coming off of it. It does match the other ones, but I don't think the dollar strength is done with yet. I think there'll be some more headlines later today. Okay. You're seeing that Bitcoin. Again, Bitcoin, Ethereum, Dogecoin is actually up a bit. There's got to be some headlines on that one, I'm sure. But Bitcoin, Ethereum down 1.6% and 2.1 respectively. Again, the reason why, the dollar. You can see that. Wait a second. Why the heck did this turn? What happened? This is the dollar. Okay, it didn't move as much here because it was a pre. Obviously they knew what they were going to say. Um, Dollar strength, massive amounts of dollar strength, you get paid to hold a dollar. You don't get paid to hold Bitcoin. So again, you're going to see more pushback in that direction. Obviously, raising interest rates, cost of lending going up. You're seeing AMC, GME down 7 and 8%. So not surprising there. Going across to the commodities front. So oil, okay. Yesterday we mentioned that we were really kind of stuck in an area at 140 for oil, and it's kind of like, all right, what do we do here, right? It's bouncing back. It's bouncing back. It's kind of hitting. And the real question was, is this going to be the launching point to 107? Um, right now, I would be a bit cautious with oil. I would say right now there's an area of buyers coming in the market right there. We just hit them. That 1030 news drove us into that level. We know that there were sellers in here. The sellers stepped in here, then stepped in here, then stepped in here, then stepped in here. These sellers aren't going to last forever at 105. If we can break through this level, 107.17 is the next area right here where sellers actually came into the market. They're there. Again, cutting things off like we just heard in the UK. We don't know what the Russian response is going to be, right? I would say watch this one. We know that we have, buddy, don't pull this out. We know that we have the ADP. I'm sorry, not the ADP. The API oil inventory report coming out at 4:30 today. Could that be the catalyst to send this higher? I would say probably. But right now, the way that oil is looking like it's set up, it is pulling back. It's trying to break through. It needed more help. It pulled back and it found some buyers. If we can stabilize and start to get another rally again, or if there's any headlines, I think 107 is in the books for today. And again, wouldn't be surprised if we tag up the 107 tomorrow based off what we heard. Natural gas. Why is natural gas going even higher, guys, right? You may say, oh my God, we're at 615. What the heck? It's summertime. This is supposed to go down. Well, issues with payments of natural gas and blocking natural gas and taking natural gas away. Yeah. Lowering supply makes the natural gas prices go higher. And remember, there's no way to solve for this. The United States can't produce anymore. It would take us 2 years to bring additional plants online. We're at maximum capacity right now. We do have contracts with other nations, but if we break contracts with other nations to send it to Europe, there's also some other issues with that as well. And the one thing that needed to happen before contracts could be broken was the price to go even higher. This is one of those ones I've warned my traders. Again, nice little short setup here. Kind of a Harry Potter. Unfortunately, you didn't get the entry on there. Natural gas is literally the I don't know what the right word is. It's like the not ground zero. It's like those Tesla balls where you touch your finger to it and all the electricity shoots towards it. It's like the lightning rod right now, right? Natural gas is the biggest commodity that's going to be associated with the whole Ukrainian situation because that's what, again, we have Nord pipelines being cut off, which was natural gas. We've seen reversals in natural gas going back to Russia. This is, when they talk about getting energy independent, natural gas is kind of the big thing. Germany already has a natural gas energy rationing, right? How are we going to ration the natural gas that we're actually getting and comments like that? I'd love to say that this one is going to go down to get short natural gas. But the reality is, I think natural gas can go even higher, which is not the most fun thing. So again, am I interested in getting this one? Not so much. Again, I think it's way too political at this point, but I do think it goes higher for those of you that are looking for a recommendation for it. As far as like kind of bullish and bearish, not an actual trade recommendation. Gold. Why is gold dropping? Now, again, we talked about a couple levels in gold. We had 1, 2, kind of 3, and 4 is what broke it. All it did was it went up to the 1945. It's a level we were talking for. Why did it take the big drop? Again, smashing inflation, handling inflation, crushing inflation. All, obviously, we've said this a million times, they're all very negative for gold. That's why gold took a huge smash down. Not necessarily surprised that it did. It did run right into an area of buyers. You can see there was basing right before our level, and that's exactly what it ran into. As I said, gold is great if tomorrow FOMC says, yeah, we don't, due to contagions of recession, it looks like we're going to have 8.25 raises in a row, right? Gold's going to take off. Okay. At this point, I believe that the market is starting to factor in a point 0.5 and what it looks like. But any talks about you know what? Yeah, we are going to do 6 raises. They're all going to be point 0.5. Gold's going to get hammered. So again, short gold I think is what's prudent. Anytime we've talked about that there's pops, you want to get short. Today's was the perfect scenario. It's funny. 8 o'clock it started to rally right into those comments at 10 o'clock, and then bam, an absolutely huge monstrous $20 move to the downside. So or what, $10, 44 to 20. Okay, yeah, no, almost $20. Drop to that one. So yeah, that's called. I don't want to say insider trading. This is kind of have an idea what they're going to say before they say it. There's literally no other way to say that in a nice manner to say, wow, why at 8 o'clock this morning, based off any of the news that we got at 8 o'clock this morning, which there was none, why would or why would gold suddenly go from 30 all the way up to 44, 45, just to have that woman talk to crush it again? It's because certain people have the data ahead of time. So yeah, silver, same exact thing. And again, all silver did was go right back up to this level of basing here. You can see it; it's been there a few times. Did the same thing. 7 o'clock, 9:30, 10 o'clock. That lady talked, George, and all of a sudden, boom. I think also again 24. I think is on the table for this week. Um, Probably tomorrow. Like I said, the more hawkish they get about just we have to stop inflation. We need to crush it. Got to get rid of it. Definitely negative for gold and silver. So expect those two things to come back down again. Um, and that's basically it for today, guys. Again, I think we've covered everything on here. The indices, again, the VIX being up 10% is like, oh, it's such a huge move. We're seeing reversals in Apple. Like I said, the dollar, the yen, those things. I think, obviously the yen is definitely one to watch out for with some of the reversal potential in there. And again, Japan loves every moment of this. Let's see if we got any additional headlines. Um, oh yeah, look, they're going after the balance sheet now. Look at that. George, 3 minutes ago, says that the rate hike must include the balance sheet. How do we get rid of this balance sheet? Because again, remember, um, yeah, remember we are quantitative easing right now and trying to raise interest rates at the same time. It's kind of one of those things. It's like, wait a second, why are we taking a stimulant and a depressant at the same time? Doesn't quite make sense, right? It's kind of one of those things. But that's what we're doing to the economy. A depressant and a stimulant all at the same time. Actually, I guess a stimulant and a depressant all at the same time. So fun, fun, fun. Anyway, that's it for today. Like I said, time flies. It's 12:58. We're getting out of here on time today. Don't forget to mark your calendars for Tuesday, April 12th at 12 p.m. Eastern Standard Time. If you guys are around and looking for a trade, kind of what's going on in the markets every morning, go to YouTube, search Nadex, hit the like, follow icon, and notification. We go live at 8:45. It's a quick 15-minute broadcast before the markets open to find out what's hot each morning. And again, some great setups this morning off of what we had talked about. And again, a lot of fun. Todd and I have a lot of fun doing it. So with that said, if you have any questions for me, here's my email address. I told you in the very beginning that I put it out there. Support@keeptradingsimple.com. And again, give me a little bit of time. It is kind of the super crazy busy season right now, and juggling a couple different things. So it may take a little bit longer than a day or two to get back to you. All right. With that said, I'm out of here. Thank you so much for joining me, and good trading.